It's the weekly 30/30 trading list on the ASX. We're reviewing the 30 best momentum companies over the last quarter, and then we also look at those that have had the best improvement in the last week, the top 30 in that list. We also dissect to see if there are any themes standing out, something that can be a great trade in the next couple of weeks. Gary Glover has been through the list, and he's going to pull apart the best trades, the setups, and things that we can be learning from. Good morning, Gary. How are you?
Pretty good, Chris.
So this week, we've coming towards the end of the first month of 2024. There's a bit more volume coming back in, but still a lot of people are on holidays. School holidays are still in force. When you're looking at the momentum leaders on the market, the best performing companies, you've got one chart on screen here. What's standing out to you when you're looking at these momentum leaders?
Well, they were all in the launch pad there in previous weeks. So like a lot of the names have been popping up in that launch pad obviously weeks ago, and they've kicked on in here. So it just sort of shows they, that launch pad there is the one that, that's one we sort of got to identify early there. I know you and I have been talking about this during the week here, but we've had some really, probably like once every sort of 6 or 8 weeks, we get a sector which just lights up the launch pad, and then it just flows through into the quality momentum over the next sort of month. So we've obviously had that with uranium here, but we've had it in the past as well with lots of different sectors as well. So, we saw, gold stocks, we saw, property price even, saw some of the buy now, pay laters there, which, almost in the face of not wanting to sort of, to look at that sector. So there's been plenty of setups there. So really that, look at that quarterly, look at the sort of weekly there, that's the sort of precursor for the big moves in the quarterlies, and then oftentimes, as we know, those quarterlies they continue to keep running as well. So often, they'll pop in they go on the launch pad, and then a week or two later they're in the quarterly, and then weeks and weeks later they can still continue to run in the quarterly as well. So not all stocks do that. So obviously, plenty of them fizz out, but the strongest ones continue to keep leading and running through here. So I know this one here, the FFG, that's the we talked about this a couple of weeks ago because this was the crypto one, and Bitcoin was going crazy. It's sort of crypto, sort of connections there. Yeah, sort of. So it's obviously had crypto's been running hot, so it's pretty, bit hard to trade this one there. Not a great overrunning pattern there, but our number 5 on the list is a uranium name, so ERA. So again, I think we talked about, I think it was around the 4th of January, if I'm not mistaken, there was when we had, I think we had at least 6 stocks light up the launch pad there 2 or 3 weeks ago. And then since then, obviously, those uranium names have sort of gone on there. So ERA is obviously one there. So, look at this here. There's a really nice little, probably cup and handle in there, Chris, as well. So start to see the sector sort of light up there. Rounded off there, and then we're sort of starting to punch through here, the B waves there. Starting to see a bit of volume there. So probably one of the smaller names, so probably not one of the best ones to trade there, but still, the sector was a light there. So you could be looking at some of the sort of sister names as well. So ERA is on the list there, number 5, I think AGE, another smaller name at 15. So again, there's that, that BCP in there, Chris, as well. So pull back there, tightened up here. And then bang here. I mean, look at the volume coming in there on that breakout there. So again, I had all the, had the Paladin.
Right.
Yeah. So if you remember there, so go back 2 or 3 weeks ago, we had Paladin basically showing relative strength there, tightening up there. There's a little BCP in there, a little breakout through here. So we had that move there, pretty healthy volumes there. So we had Paladin, we had poised energy, which is on, again, over 29 on the list as well. We had this one setting up as well. So again, just the whole thing, this is like a corrective decline. So really, this is impulsive and this is overlapping, and then we start to break up here. So, really, once we've sort of gone through this level here, we've really kicked on there. So we saw some volume really come through as well. So really, that's a really strong sign there. That sort of stock has showed relative strength through that period, and then sort of kicking up here. We know those names have just sort of gone on with it. So, Bannerman there was sort of, was one of the other ones. That, to me, Bannerman and Poised Energy were the two that I was closely looking at. to me, this was the one that I thought looked the strongest there, because this was really really sideways orientated here, so it really stayed nice and tight there. So this is the old David Ryan most talks about congesting under the high there, that really tight pattern there. So we got a little VCP breakout, I think on the 2nd of January, some pretty good volume there, so breaking through there. So that's a really good signal there. So I think that's sort of one that I did see and trade there, tightened up here. Then you're going to get congestion under the high here. So really, it should have been, probably should have been adding to this, getting heavier, looking at that sign there, and then we've cracked through here. I traded this pretty poorly actually. I sort of didn't get heavy enough. Tried to get sort of cute under the high here, which just went straight through. Didn't sort of get myself. I like to sort of try and sell a little bit in this. If I get a nice little entry in here, and then I sort of try and maybe I thought I might sort of curl under the high. So try and trade. I think it's about 3 or 4 days up here. Might have been day 4 or something, day 5. Try to trade this, some of it out, pushed on through. Should have just put it straight back on again. And I sort of carried some through another 3 more days, but then it's continued to sort of stay pretty strong. So for me, I made some money, but it's sort of like look back now. So this is, in terms of what we've been doing here for the last couple of years, we've got the perfect setup, the launch pad, we've got the BCPs, we've got a leading sector, you've got a whole basket of those sort of stocks all showing strength there. So that should have been really sort of building up multiple positions, scaling up, and then really only trading a little bit. So I didn't scale it big enough. I traded out some of it into heat, but I should have held on more. And then once it didn't sort of show any weakness, I should have probably put some more back on again. So like I just made a few rookie errors through that sort of trade there, really, because it's sort of like that's that's sort of something, Chris, too. That's not always setups we just sort of saw there for uranium. That's we might sort of see something like that over the next few months.
Different thing.
Yeah. And we just, when we get, maybe every sort of 6 or 8 weeks, you'll get like a wide range of signals like that all in a cluster. So you don't get them every week. So that was just a really sort of A-class sort of setup there across the whole sort of sector there. So we've just seen all those stocks. I think even deep yellows on the list as well. That was a bit of a laggard. So you could have traded the big ones, sold some into those sort of heat there, then started to look through some of the sisters and go, okay, maybe I'll just trade some of the smaller ones, but maybe a bit lighter. You could have really had probably, really in retrospect there, probably should have been long 20%, 2 of the strongest names, traded maybe out a quarter into some heat, maybe traded out a half into that really big jump, and then starting to look at some of the other smaller names, maybe 1 or 2%, 10% holdings, and maybe something smaller, which is sort of lagging, which is often the case. So
there's one in the top 10 just yesterday, CXU. That was one that was in the uranium space that was absolutely powering ahead. So I know it was a bit of an early start in October, November, but how would you, definitely as you were saying, the uranium space is lighting up. These were almost an early mover, and then when the rest of the sector got going, they really ratcheted up hard, like you're saying, early January, and got running. Is that one that you'd be able to trade, or CXU, or is that kind of X-ray, Charlie X-ray, uranium? CXU, yeah. So I'll have a look at the ranking of where that one sits, but
yeah,
definitely strong momentum, smaller cap.
Yeah.
Like you're saying, you can play it with the big names and you can play it with the smaller names here as well. But looking at the percentage return, you've got the 3-fold return since sort of the Christmas period really started, the downtime.
Yeah, I do sort of try and keep out of the sort of I've worked out that I'm not a sub 10-cent trader, so just get big percentage moves, sort of just not fairly comfortable in some of those. So just anything under 10 cents, I just personally tend to avoid. I like to be in the sort of bigger sort of shares there. So I'll sort of trade down there. So yeah, it's a weird thing. It's just a comfortability for me. Sort of, the sort of 20, 30 cents or above, or dollars, $2, $20, that's fine there. But yeah, sub 10 cents, I'm uncomfortable all the time. So, but maybe some of my biggest losses that come in from sub 10-cent stocks. So I'll try and avoid those.
I was hoping you might have an insight because for me, it's under 50 cents. I've looked at it and my success under 50 cents just isn't as good. So,
Yeah.
Oh, well, maybe that's for the other traders. But that's a good insight on the uranium. As you said, it's set up. There was a huge cluster. And you'll give us an insight in the weekly when we get to those, whether there's anything coming. But like you said, it's probably once every 6 weeks or so, we might get thrown a really nice setup.
Yeah.
So,
Yeah. So what you're looking for, so, if anyone's been watching this report for a while, I'm going to give away the secret sauce here right now, is that if you see that launch pad and you get 4 to 5 stocks out of the 30 are all in the same sector and they all light up in a simultaneous week, then I reckon that's probably 75, 80% chance of that theme, that sector, lighting it up for the next few weeks at least. So even the ones that sort of don't carry on tend to sort of have at least a jump for the next few weeks. So they have a bit of a jump, then fizz off. But most of the time they have a bit of a jump, really tight consolidation, and then run again in the big moves there. So you're looking for those clusters on the launch pad, looking for a lot of stocks in there. So if you see 6 or 8 gold stocks, 6 or 8 lithium names in there, 6 or 8 property, whatever, if you see quite a few of them all line up in the same week there, that's really a heads up. You might see that sector under move there. So that's if I look back at the last couple of years of watching these reports here and following them and trading them good and bad, sometimes we learn from our mistakes here. So I feel like I've made was trading these pretty well here recently. Probably made a bit of a mistake. There's much I made some money. It's the opportunity on for me as to me there was an A-class setup across that sector, but all the classic signs we're looking for that should give us the conviction to trade a little bit harder there. So me personally, that's what we're sort of we're looking for. So future there, that's what we're going to try and identify. Let's get onto the list there. So a couple of good names in there. I think BIO was quite a nice one there. Probably, almost like a little bit of a cup and handle. There's pretty flat sort of structure there, and then it sort of started to pick through. It's again a bit small name there, but has sort of continued to trade all right. Wasn't there SMI? This one's just sort of showed relative strength here, Chris, as well. So once it sort of change of character started to build here, you see there that we had some reasonably healthy volume, but then it just sort of stayed nice and tight, and then we're punching through. Then we're just tightening up again, punching through. All the consolidations here. One thing you notice about them is they all go sideways. So all this, even this up here, it's had a pretty good move here. Maybe that looked a little bit exhausted at the time there, but then all it's done there is just remain tight there. It's that David Ryan there, just spending multiple days tightening up just underneath the high there, and then bang, you punch through it. So, break into a new high there. It's just a really good setup there. So you're looking for these leaders to show the strength, break through some old highs there, tighten up, just have these little sideways pauses there and then keep on through there. Once you start to see the volume starting to climb here, that's when you sort of get some confidence that there's some backing behind those stocks as well. Some pretty good lessons there. Probably one of the best lessons there is STP. This is a stock here, it's just selling bamboo undies. Christ. But look at the price action there. The price action has been red hot. There's been really, really strong volume through there. Look at that jump there, change of character, big volume flowing through there. And then after that, the whole thing just consolidated and tightened up. Look how tight this thing is.
So it's that impulsive and corrective that you're talking about?
Yeah, so
that's impulsive, big volume.
Going up hard and fast here, big volume, big accumulation there. So that's big accumulation taking place. Has a bit of a pullback there, but only has really the 1 day of selling. Whole thing tightens up in there, and the whole thing just dries up. Well, that's a really tight consolidation corrective there. So pushing through here. So that's nice and tight as well. And then another jump here. So it's pulled back here, in a nice fashion there. So looks pretty constructive overall. It's just sort of kept going here. We still had pretty healthy volume. So yeah, it looks pretty good. But just a good lesson there, really sort of watching those sort of good volume tighten up. Other one I thought looked pretty interesting here was EYE. Had a bit of a jump on volume there. Bit of a high type flag potentially in Equus going on at the moment. So that's sort of come on the back of a sort of some changes. Like a bit of a jump in sales, but also a bit of a Medicare sort of change in the US there for that glaucoma sort of group. So just want to keep an eye on there. Nice and tight in there so far. But yeah, looks pretty good, pretty interesting there. Just might tighten up a little bit more here. But LV1, just noticed a few little cup and handles in the setup here. This is, again, it's had a pretty good volume rally up into here, stayed pretty tight, had a bit of a dip off here, but then it's gone straight back up to the high there and congested under the high, and then we've broken through here. So nice little cup and handle in here. I know it's a little skinny to trade here, but I guess you just adjust your trade size there with a little bit harder to trade. But that's our quarterly momentum there. So there's plenty of, to be honest, I could probably just go back and study that list there and learn a lot about how to trade properly on that list. So you can spend the next week just studying those 30 stocks. Probably half of those stocks in there, there's some great lessons there. There's great cup and handles. There's plenty of VCP patterns in there. There's relative strength. There's leaders that's just got leadership groups that have popped up in the Launchpad in previous weeks there. So a large percentage of those stocks have started in the Launchpad and have kicked on here into the quarterly and ran in the quarterly as well. So there's just lessons galore in there. Probably and I'm talking about A lessons, not B or C type lessons. I'm talking about the best lessons. So yeah.
Well, that's key. We're going to unpack the best charts there, and it's good to see that you've got A plus type setups there and how they got to be A plus. You're saying it was only a couple of weeks ago you were highlighting them on the Launchpad. So if we are looking at the Launchpad, we'll move into that. As you look at those charts, it's a list of another 30 charts. They're not yet market leaders. They're not yet momentum leaders with these phenomenal charts. Just like you were saying with the uranium companies only 2 weeks ago, they were VCPs, they were congestions, there were coils in there. They hadn't yet broken up. And we don't always get a stellar theme every single week. What stood out to you this week when you're working your way through the Launchpad, these weekly movers? Is there anything that's coming to the forefront? What are you reading from it?
Yeah, probably one little thing that sort of was for the list there was probably a bit of a mixed list, so nothing sort of standing out too much in there. There was quite a lot of VCPs in this list, so that was interesting there. There was quite a lot of growth names. So if you think about obviously the Nasdaq is pretty close to, it's like 15,000 here, so it's pretty close to the high here. So a lot of the growth names in the US have been, the beta and other things have really sort of run pretty hot here. So most of those growth names in the US are running pretty hot. Whereas if you look at our growth names, the stocks that were sort of running previously, they've all sort of pulled back here. So some of those are just they're just starting to emerge after having a pretty decent pullback. So it's a bit of a weird setup because the growth names in the US are trading near their highs. A lot of the growth names in the Aussie market are trading near their lows, which doesn't sort of match. So there's a bit of a sort of a quandary there. So just starting to see a few emergence there. So I think TLX was one name that obviously had a bit of a cool off there, just starting to build here. Did break through this sort of B wave there. Again, it's just obviously gone through a big correction pattern there, but just starting to emerge here again, starting to break out above the old high there. So that was a good little signal there, breaking up there. So not bad volume there as well. I think IEL number 28 list as well. This is again, it's another growth name here, which is sort of down near its lows as well. It did go to did break a new date or a new low here, but has got a little VCP in here as well, Chris, as well. Just a little tightening up, start to break up there. Some good volume in there, but it is sort of sitting under the 50. I do like them to be above the 50-day moving average normally, but sort of good volume at the low. We've come back and retested the old low and then started to build here. Some good volume here. So that's kind of interesting. One not on the list there, but I just noticed the Jumbo as well, which is another gross name. That's come back. It's just basically going the opposite direction to the Nasdaq, but it's just sort of popped here for the last few days. There's just a few of those sort of names as well that have sort of, I think, Hello World as well, which was running previously in that travel sector, has cooled off here, but now it's sort of like maybe it's starting to emerge here as well. So it's just a few old growth names that have really sort of come off, starting to sort of come back. I think AUB was another one as well, which was in that insurance space as well. So again, we've come back here. So we've got high, lower high, lower high, lower high. So it's fairly corrective as well. So the whole thing is overlapping. So it's not like an impulsive move down. It's more of a sort of sideways sort of move, and then looking for that to emerge there. So I know, like, one of the strongest growth names that we identified there in October 22 there was 360. It was sort of making high lows at the time there. But look at that. That's the sort of classic growth stock here. And that's gone through like a fairly decent decline here. Just made a little false break here recently. Went down to a new low. But again, the volumes are kind of light here as well. So just a bit of I thought finding our market's a little quandary here at the moment, because the Nasdaq's at going, basically retesting the highs here. Most of our growth stocks have just gone back and retested the lows. They're just starting to bounce, but not a lot of volume coming in. So there's a bit of an odd dynamic in there. So just a few things to watch in there. Thought EML was interesting. That's a potential little game changer trade there, Chris. It's obviously jumped up on some news there and sort of gapped up. That can be oftentimes you see that little game changer trade there, traded on massive volume. That ends up being, the low for that day. There ends up being the low push on through. So that does look quite good. DWH was another one there. Again, this is a corrective decline here as well. And another sort of growth name there, which has gone through a bit of a decline, but just starting to build. So still got a series of lower highs there. What I sort of see go a new high, but just sort of hasn't happened yet. So that's probably the biggest theme I've sort of noticed in there. Is a lot of those old growth names have sort of coiled here. I think MAD is another one here. So just probably watch it. What you want to sort of see is these things will sort of go through a bit of a corrective decline. You want to see the price action tighten up, a little VCP set up in there, and then maybe a B-weight break here. So seeing lots of potential VCP sort of setups, but still early here. You got to wait for that sort of that congestion and coil here. Just the only thing that makes me nervous is the Nasdaq's pretty much near new highs there, and these stocks are sort of kind of lagging here. So, but we just got to follow the price action there. Let the price action dictate here.
But just on those, when you're looking at them, for the likes of, say, Hello World, where it's down near the lows, you said it. A couple of them you've highlighted, they don't seem to be gaining any more steam. They might have touched the lows, false break, whatever it is. From a psychology perspective, if a company has traded down near the lows, or possibly edged out a new one, like you call a false break, or can be a spring sometimes, is the psychology that it's tried it. It hasn't triggered any new stop losses. So there's not automated selling. There's not new people that are suddenly adding a new flood of sell orders to the market. It's tested it like a Jesse Livermore sort of thing. It's probed that price level. It's pushed below it. And then the market's soaked up that small probe order and then actually surged higher. Is that sort of your testing support and possibly building support for the next move up? Is that kind of what's happening in those scenarios?
Yeah, so you want to sort of see how TLX has sort of had a pretty decent decline here, and then it sort of started to build here. And you saw some okay volume there. Had a little bit of a B wave break in there, but really didn't go on with it. Pretty messy through there, but then I like to sort of see these little three-way, little ABC pullback, and then start to build through like the lower high there. So for me, I like to sort of see that little three-way pullback, and then maybe starting to break through a B wave. If I see some volume there, and that's when I get more excited. So that's probably the first I would look at it, something like breaking above that lower high there. So those sort of stocks that have gone through the corrections, you sort of need to give them a bit of time. That's sort of why you're going to be patient sometimes. Sometimes these lower highs can just keep going, and they can fail in here as well. I've definitely seen an emergence of a few more failures than we've sort of seen for a while here recently. So getting a little harder, a few more sort of failures there. Whereas I don't think like a month or two ago there wasn't not many too things to failing. They were all sort of following through. So just starting to see a few more failures in there as well. So it's just make it slightly trickier, but yeah, just looking for that sort of heavier volume there. Maybe the B wave break here, just a stock that sort of shows resilience there. I think that PWH is that's a class one there. That's it's an overlapping sort of corrective decline here now. So still hasn't gone on your high yet, but you just have to give this time here. This might, it's like we'll have to sort of congest, and then finally break through. You just might be waiting another few weeks here for this to seem to set up here. But that's what good traders do. They wait patiently for the right setup.
Well, you've been through both the quarterly, the weekly lists and found the charts and highlighted them. Have you got something else to share and part on us before the weekend? Trading insight, something we can take into the weekend and reflect on?
Yeah, my only trading insight for the week is I did go out and watch a couple of Australian Open matches this week, Chris, the first time out there, which has been fantastic there. And I saw two matches, and the first set, the first two matches I watched there, the first set was won 6-4 by both sort of players there in the match there. But they give you the match stats after each sort of each set there, and both winners who won 6-4 had 36 to 33 points, to total points won. So there's only really 3 more winning points for the whole first set decided the match. So you got one player there. He's got career earnings of just over $1 million, and the other one's got career earnings over $10 million, and it's really only a small amount. It's really only 3 points difference in the whole match. So these small differences really matter. And although both the players are really close in ability, and the contest is really minimal, it does have a big difference at the end. So just like trading, those small differences they make a really difference at the end of how much profit we can make each month and each year. So really, it's the small improvements we can make in the long run that will sort of will have the impact there. So like tennis, there we shouldn't really be shouldn't be focused on our career ranking or our earnings or the trade or our profit to date stuff there. We just want to be focusing on making small improvements each day and each week, because those sort of small differences, they make the big results in the future. I think James Clear sort of anyone who's read Atomic Habits there basically says we overemphasize results and underestimate the importance of the process. Just the tennis there, just how close the difference between the top guys and second tier guys, it's only a couple of points there and then a whole set. So it's really not, there's a big difference in the P&L or big difference in the earnings. So that's exactly what the way trading is. So don't try and make big changes to your trading and stuff there. Just try and improve the process just a little bit. Just try and improve it every day, every week, every month there. Just try and make those small adjustments there, because those small improvements, the process, potentially will have a big difference at the end of the year, the overall P&L.
That resonates really well. And I know we've talked about the books that we've read. In triathlon, it's always going for those 1% gains. The big ones are pretty obvious, just the 1%ers, and that makes a difference. And there was a book we spoke of again about tennis, and I have to look up the author. It was Novak Djokovic when he was ranked 400, 500, 600. And between him being ranked there and ranked number 1, he only won 3% more of his points. But that's kind of exactly what you're talking about, isn't it? It's just those small little differences that make a huge difference to the P&L.
Yeah, no, 100%. It's just that it's a really tight line sometimes there. So just to prevent that. So just don't focus on the big picture there. Don't focus on the P&L. Just let's keep hearing over and over again. Just focus. Just get the process right, and also judge yourself on the process too. Where sometimes we can judge ourselves on the P&L, how much profit we made or lost. But if you followed your process correctly, put the trade on the right way and trade it the right manner, that's what counts there. Because if you keep doing the process correctly every time, you will catch up big winners on the way. So, you don't know which ones are going to be, whether gold's going to run here, uranium's going to run, or lithium's going to run. You don't know which sector's going to really heat up. But you follow the process there, maybe if you follow that process 10 times out of 10, and then say 5 of those 10 really, really heat up, and the other 5 just have say 4 have a mediocre move, and maybe 1 fails, or maybe 2 fail, then you get your couple of failures, you get your sort of mediocre there, but then you capture all the big moves, because that's your process is nice and tight here. So just so important to have that process locked down to capture the moves. And you got to understand that too. You're trading there, it's just forget looking at the P&L results all the time. Just focus on make sure the process is correct. Make sure you got the process down right, because then you can see in a difficult market, if the process is right, it keeps it all tight. So you not make any progress. You've reduced your risk, and you stop sort of yourself from losing money. So if you can identify that as well, you just got to persevere. That's why people sort of give in. They feel like I've got a good process, and it doesn't go through a period of not working. I'm going to change it, but they just left it as is, and the market sort of suddenly turns in their favour. All of a sudden, bang, it opens up, and away you go. So I think I sort of highlighted there. I think around about 11, 12 weeks of the year, I counted for around about 130, 150% of my profits for the year. So 12 big moves of the year really do account a lot for all your gains. So that's what we're looking for.
Well, I'm glad we've got you to guide us through and to keep us circling back, looking back at ourselves and reflecting on our trades. We'll say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.